Hey, JJ here from the Art of Value. Let's try that again. I just recorded a whole episode and it didn't take something technical difficulty. So let's try that again. Maybe it'll be better the second time because I've just done it. So yesterday I was talking about the Spotify results and the shareholder letter. So today I want to go through the earnings call, which is all important. Yeah, earnings calls are great because you can hear if you don't read the transcript, if you actually listen to the call, you can hear the way that they're speaking, how confident they are, if they actually believe what they're saying, the way that they say it. And it's important because of this, I think, this comparison to Netflix. And is that valid? The stock's been plummeting. So it's just over 100 today. It went up last night, but the day before, after earnings, it went down over 12%. And I think because overnight, overnight for me, I keep saying overnight, but the last session, the Amazon earnings came out, which weren't great, and it's after hours down about just nearly 10%, but Apple's earnings were good. So I think that's probably going to affect it again, but we'll see. So the earnings call, Daniel Ek said that everything came in line or ahead on every metric, and they're pleased to continue the acceleration of user growth heading into Q2. They're pleased with the continued acceleration of user growth. So they think they have very compelling offerings for creators, users, and advertisers. X confidence in the business continues to grow on all fronts. Did sound sincere about this. Streaming is driving record revenues in the music industry in general, and Spotify's core business remains incredibly strong. Worldwide growth is truly staggering, he said. So they're continuing to make investments in enhancing the platform, especially investing in their core platform capabilities, multi-year investments. Spotify does get criticized for not being profitable, but if you think about the path of Amazon over the years, reinvesting back into business for going for huge growth, and I think Spotify is definitely doing this. But any tech company in particular, emerging tech that's not been profitable in recent months has just been hammered by the markets. Given the results, they expect this to continue for the foreseeable future, the investments, that is. Ek realizes investors want more clarity about when the financial benefits will show in the financial statements, and they'll be talking about that in the upcoming Investor Day, which I'm pretty keen to see. So a few examples in this quarter that they shipped this quarter. The ad business continues to be strong revenue driver thanks to investments in audio advertising, acquisitions, Podsite, and Chartable. So he said the podcasting business continues to surpass all our high expectations. Podcast consumptions hours reached all-time high. Now there are more than 4 million podcasts on the platform, which is up 53% year on year and up from 3.6 million last quarter. Podcast consumption is strong and increasingly sticky, he said, especially with innovations like with video podcasts, which I use, and that's part of my research to use it and see how the advertising tools in the background are working, which I'm not using and I don't plan to because only kind of big podcasts, but it's worth it for that. They talk about Russia being a bit of a drag, but less than 1%, leaving Russia. So what's here most interesting is the Q&A. So I'm going to play a little bit of thing from Ek just to hear his own words about the comparison. Was this question about a comparison with Netflix? I think similar concerns.
And with expectations of, I feel really, really good about the business. Now, all that said, I do want to almost take a step back and say that I think a lot of people are grouping us and Netflix together. And I've said this before, but I'll say it again. Besides both being media companies and being primarily subscription revenue companies, that's kind of where the similarities end for me. With Spotify, for instance, we are a platform. Netflix is not. With Spotify, we have a free service. Netflix does not. We have hundreds of millions of pieces of content. Netflix makes its own original content solely and license a little bit. So it's just vastly different businesses. again, we've seen competition in Spotify since 2015, and when I look at the video landscape, it seems like competition is heating up. So there's a lot of other dissimilarities between the two businesses currently as well. But we feel really good about where we are and the business we are, and we feel audio is an overlooked market that's growing, and it's going to be really big.
Okay, so yeah, audio being really big in the future, and talking about how distancing themselves from the Netflix model. And of course, they do have, the freemium model is different, where they've had potentially advertising, and now they're ramping up advertising, even in the music, where people are listening to Spotify for free. They hear ads. They could increase that, and Netflix is just thinking about getting into that, having a lower, cheaper offering, or maybe even free. I don't know how they're going to do it, but Spotify's had, as I said, competition all the way along. So I thought that was interesting the way he said it, that Spotify is being lumped into Netflix, and it's not. Having audio and the opportunity that they have is so different. So there's, adding to that, our guidance, we feel really good about the user growth as well as the subscriber growth. On podcasting, we have gone from believers. There's a question. Investors have gone from believers in the podcast strategy to penalizing you for the investment with no confidence that it creates long-term value. Daniel, why are you convinced that this is the right strategy? So yeah, interesting question. He says, we see very clearly in the data there's an enormous appetite for existing and new users to consume podcast content. Second, for creators, there's an enormous appetite to engage with our audience and create and upload and use our tools like Anchor and Megaphone and all these other tools to grow and engage with their audience. For advertisers, we see an enormous appetite for audio in general. When we added podcasts, we became a much stronger proposition for advertisers, increasing our order size in music and podcasting. And lastly, for investors, podcasting should be a better business model than music from a gross margin perspective. For all of those reasons, when you add them up, we feel really good about the investments we are making and long-term implications we have for our business and our shareholders. Added to that, if you look at the metrics, we see in podcasts, MAU to total MAU had an all-time high in the quarter for podcasts. Streaming on podcasts had an all-time high, so we're seeing that engagement access across the platform. So they seem confident about how podcast strategy is going to work out, and they're confident about the investments they're making, but investors aren't so sure. I am with them in terms of long term here. I think podcasting is going to work out. So that's about all I wanted to say today. There was more, but it's basically there's more and more about what he said, but it's basically sort of reassuring that podcasting is going well. There's growth in podcasting in different areas of the world, and he says that talks about the ceiling being 2 to 3 times for audio, even in the developed markets. So there's plenty of growth ahead. There's no engagement ceiling in sight, he said. And if you look at the landscape for advertising, he talks about developing advertising tools, and the marketplace for that's going well, and they're developing a lot of investment going into that. And talks about they had a question about what projects and investments are dragging on gross margins, and he said making of original content that will continue to grow, and that's the biggest drag on margins for now, and product innovation and podcasting investments. Podcasting. So there's a question about the best opportunities by location. They talked about Southeast Asia and India. Indonesia are going particularly well, and the TAM in those regions is huge. More questions about podcasting and progress in podcasting. So they said the hours of listening podcasting is up significantly year on year. The progress is going great. And advertising is up 30% in the quarter. It was looking to be up 35% before the invasion of Ukraine, but they're really optimistic about podcasting. And paid podcast subscriptions on the platform, that they confirmed that they're talking about a 5% take rate from 2023. And it's really early days for podcasting subscriptions. But yes. So then there was last question about live content, about how that could develop quite well. They talked about Green Room being rebranded as Spotify Live and integrating that into the core service, and having time-shifted content as opposed to just live, which the internet is good at. And for me in particular, say things in the northern hemisphere happen, and it could be vice versa at a different time zone. So when I wake up, I see something that's happened live and it's been recorded. Same with Twitter Spaces. So it's kind of like that. And they see that the must-see things in terms of music and podcasting that could be live, that could drive user growth in the future. But it's all kind of systems go, and they don't see the investor comparison to Netflix as being fair, and that's why I think it's a big reason, as well as the general non-profitability, that the share price got down below 100. So anyway, that's all for now. If you found any value in me doing this, please like and subscribe you catch the video on YouTube and of course on Spotify, because I have been using Spotify video. I'm interested to see how the ad tools develop for that over time. There's subscriptions only at the moment, but I think that they'll probably have in the future dynamic ad tools similar to YouTube, I would say, even on podcast video. So that's all for now, and catch you next time. Thanks.